traders at Access Bank say they are seeing improved offers on mid-dated bonds, especially the 2031 and 2035 papers. On the Treasury bill side, the focus is on the long end of the curve, with interest seen on the September 2025 to February 2026 maturities trading around the 19% handle. Odinaka Linus-Nwokonkwo, a Treasury Team Member at Access Bank, joins me to pick up the conversation from Johannesburg. I have to emphasize, Odinaka, which means that you are going to be doing more of the talking than me. But let's just perhaps get your sense in terms of the key trends that you have been observing within the short-term market.
Okay, so for the fixed income market, we've seen that bullish run. If you could recall last week, it was very, very quite bullish. On the NTB, we saw over 3 trillion subscription in the auction, and post-auction, we saw a lot of buying sentiment that drove rates down from the 20.32 down to 19% levels. This filtered in the bond auction late last week and also on Monday, where we saw a significant decline in bonds of about 80 bips. So it traded around 21.10 for the undrawn 2035 and 2031. However, today we've seen slight retracement because of weak appetite for the current bond offerings around 21.1 levels. Today is trading around the 21.5 down to 21.6 levels on those mid-tenor paper.
And why is there a specific focus, in your view, around that mid-term paper?
Can you repeat that, please?
Yeah, I was just asking the question around the activity that you're seeing around the mid-term paper, the mid-term dated bonds. Why are you seeing particular activity around there?
Oh, yeah, so that's because that's the bonds where that is on the run, so you have more supply, and also the 2035 is the bond with the highest coupon at 22.6, so a bit attractive for the pension guys and also the asset management firms. So you are seeing a lot of interest around that side, and also that is the part of the curve that you have the highest yield. So a lot of activities are centered around there. The long end of the curve continues to hover around 18%, while the short end continues to hover around 20%. So you see that most of activities were centered around the medium tenor paper because of the yield.
Yeah, I'm seeing an interesting trend here where your Eurobonds are now around 9.05% when you compare with what you're seeing in Johannesburg in rand terms, around about the same area, even though we have seen pressure in the past few days. So I wanted to talk a little bit about the yields picture on those Eurobonds and the kind of demand that you are seeing.
Yeah, you know, for sub-Saharan Africa, we've seen that demand even on Eurobond space. Remember, Nigeria issued a Eurobond late last year around 10.375. That's the 2034. Used to be a 10-year paper, now currently 9-year. So after that, we've seen significant rally. The new frontier and emerging market is kind of very attractive for international investors. So both the local and the Eurobond space, they keep bringing inflows into that. We also see when you compare that to Egypt, Egypt just issued a paper 5-year and 8-year paper around 8.5 and 9.6 levels. So for the Egypt, it's just slightly bearish, and possibly you could tell it's because of a more increase in supply of papers on the Egyptian front, but on the Nigerian front and also on the corporates, we've seen that buying sentiment.
Yeah. Before you go, let's talk quickly about the outlook for the Naira. So we have seen a strong dollar environment as a result of those tariffs by the U.S. president. I just wondered what kind of an impact you are seeing on the Nigerian forex market.
Yeah, for the foreign exchange market, yesterday the last trade traded around 15.13, so it kind of depreciated by 11 naira. If you can recall, the previous week we saw FX trading around the 1490, 1470 levels. We saw massive inflows into the Nigerian space, and one could attribute it to the positioning of the OMO auctioners at the time, when we saw over at least 3 trillion subscription. Since the central bank has not floated an OMO, we've seen that a little bit of retracement in FX, so we've not seen a bit of inflows from the offshore. But currently still hovering around 1500 to 1510.
Absolutely. And what kind of an outlook do you see for the rest of the year? Very quickly, if you can.
For the year, I would say the sub-Saharan and African market, there's a lot of buying sentiment around that. Investors, when you talk to them, they are all bullish on across sub-Saharan and also the Nigerian market, new frontier market, and that's a positive sign. For the interest rate direction, there's some school of thought that we might actually have seen the peak, so you might start seeing a slight retracement in yields. There is an MPC going on that will go on the 19th to 20th. It was moved to that date possibly due to the inflation figures that will come out on the 17th. Once that prints out, we could see the direction of the policy makers to see where their view of interest rates. Remember that in the new inflation figures, it will kick in the rebased GDP and the rebased figures, and also the change in the constituents or the makeup of the items that constitute the inflation figures. So once those figures are out, then we can clearly see the direction of the policymakers. That can set the tune off to know what we should be looking out for the year.
Absolutely, Odinaka. Thanks very much indeed for your time. That's Odinaka Linus-Nwokonkwo, Treasury Team Member at Access Bank.